So I'm just going to go over a position I took on Friday, which ended up being a break even on EURCAD. But just starting off with a weekly time frame, as you can see on the higher time frame, we actually have this value area sitting here, and the reason we can distinguish it from this value area here is, as you can see, we had this sell-off from this value area, which gives us a good idea that this is the more valuable area of the two. If we just draw in the ray line, you can see here that we reacted to this area with this nice candle formation. As you can see here, is bullish candle followed by a high test, and then you've got this bearish high test which committed through, giving us this sort of evening star formation. As you can see, we've committed strongly now, and going down to the daily, we can see structures coming in much more clearly. As you can see here, we approached with a 1, 2, 3. We had a 3-touch ascending channel. We tapped into the area and strongly committed. Where are we now in the structure? Well, with this A to B leg, we can see that we're in like the last 90%, right? So we could turn around from this point, or as you can see here, we're forming this volume here, which gives us an idea that we're still in a state of continuation. If we just look at the sequence here, it's a nice sequence. We have a strong push down, we have our little hook point, then we have our larger flag, and then we have an even larger flag on the daily, visible on the daily. I'm just going to go down to the lower time frame for now, and then we'll go back up to the daily. But as you can see, we have this very, very clear near miss to this low, which gives us an idea that it's very, very likely for price to start filling that with this sort of continuation pattern. So all we need to decipher now is how can we position ourselves within this structure to allow us to catch that move. Just going back to the daily now. I'm just going to go back to the 4 hour for 1 second. But as you can see on the 4 hour, we have this clear structure that's forming. This 3-touch structure that formed. We have a weaker first touch, which is a negative. However, we're not really playing the risk entry, so it's not a big deal. We have a 1, 2, 3. What do we have sitting above? Well, we have a hook point. So I did cater my entry to this. I forecasted a stronger push down with a 1 hour flag, just so we can get that bit of extra confirmation. On the daily, we have this extra bit of confluence. As you can see, that is a beautiful daily close. We have this bullish candle, large bullish candle, and then we have this high test, followed by this very, very strong bearish retrace, which gave us over 50% of that candle. So yeah, evening star formation on the last leg of that 3-touch structure. As you can see on the 4 hour, very direct price action here. We did have price messing about here before we had that breakout, but this is essentially just building up volume. We close below here, very direct 1 hour. So all we're looking for now is for some sort of 1 hour structure in this area for us to be able to get in on that continuation to the downside. If we just go down to the 15-minute, we can see that we do have these reference points that are starting to be formed. All I was forecasting was price to come up, form some sort of 3-touch structure or something of the sorts that looks like this, right? Anything like that, I was happy taking. Price actually started to form like this the day after. So this was on the Friday. We had this wick here, and as you can see here, we've already formed these 2 touches. So it gave me a good idea that this could be the structure that's forming, and now we're just waiting for that 3rd touch. I wouldn't get in on the reduced risk entry just because the risk to reward wasn't as good. It wasn't actually worth it for the entry. As you can see, down to that low, we'd only have like a 3%, and then down to that main target, we'd have like a 5.9. But yeah, we didn't want to get in a reduced risk entry as well because we do have this wick. So price could just come down here, fill that wick, and then we get taken out for a -1 instead of getting in on a risk entry here and then being able to manage it down to this low, get it to break even, and then it would take us out for break even. So if we just go down to the 15-minute to look for the entry. So what I liked about this was that we do have this sort of structure approach to this last leg. The little nuance or the little unique thing about this situation was that there was some sort of subjectivity towards the first touch, just because as we did have this near miss here, we did have a possibility of this just forming this sort of 3-touch instead, but the angle on that is a bit weird. So all I did was take that into consideration when putting my stop loss in. But as you can see here, we do have this sort of 3-touch structure. I was waiting for the 15-minute instead of the 5-minute here. As you can see, 5-minute got a bit messy. So I just waited for the 15-minute. So after we got this first retrace candle here, you could see that that still is not a valid entry yet, because it hasn't at least met 50% of that previous candle. So I waited for the next candle, which did look like it was going to commit from there, but we eventually pulled back up. As you can see, this wick, I'm not really too bothered with that wick, because generally when looking at a retrace, we want to look at the candles, the candle body instead. So I just placed my entry just a tiny bit below the protected above. Let me just pull out the entry. Place it a tiny bit above. Got in with around about 16.8 stop loss. Protected above there. And the way I took into consideration the first touch was, let's say for example, this was actually the first touch, right? And we had this structure like this. I took into consideration that, and I tried to protect it with like an 18.1 pip stop. So obviously you can't protect everything, but in that case it didn't really take too much from the risk to reward, so I was happy taking that precaution. As you can see, that is the entry. Going on to the 1 hour now for the management. It's pretty simple in management. It pushed away pretty aggressively. It closed with a very bearish candle, so I was happy moving to break even at this point. As you know, these sorts of structures sometimes they pull back a bit before dropping, so I was a bit more lenient with moving into profit. But as you can see here, we retraced strongly with that 1 hour and got taken out for break even, and eventually it started to push up to the upside, which where we are now is actually here. So we are building up this volume, and what I am forecasting is price to push up to the upside, fill this gap between that hook point, and then look for a 1 hour retrace 15-minute flag. So yeah, that was EURCAD. Very simple, very direct trade, low risk grade. Perfectly fine with the entry, perfectly happy with the execution, wouldn't do anything different. So yeah, that is EURCAD, and I'll catch you guys in the next one.